The reason why more than 85% of traders lose their money is because they think the market has gone too high or too low. These traders can't understand that there is no such thing as oversold or overbought when the market takes a trend. That's exactly why in this video I'm going to show you how to change your thinking about the market for success. Profitable traders don't think about what can happen. Profitable traders analyze the market and then make possible options. They work with possibilities. They know where their analysis is invalidated. They know where their entry should be. They know where their stop loss should be, and they know where to take profit. This is what it means to be a successful trader. Okay, instead of TradingView, we just go to the chart and start analyzing. In every video I make, I repeat that it's always good to trade on trend. I'm not saying this because I like it, but because market makers do, hedge funds do. To stop buying a liquidity provider, start trading like market maker. Okay. Right now we're on absolutely next Euro USD chart, 5-minute time frame. This is the most liquid market with the highest volumes. Let's start defining the trend. Okay, so we start from here. A high, then a wall, then a higher high, higher wall, higher high, higher wall, and higher high. Then this massive impulse to the downside makes a lower wall. Okay, after we break this wall, we have a change of character, and this is our change of character. So the trend turned from bullish to bearish, and as all the other gurus teach you, we have to wait for the price to come back and then sell. Now we put our order box, the last bullish candle before a strong bearish move and the last bearish candle before a strong bullish move. We place our limit sell order exactly at the first order block here, and of course stop above the previous swing high. Risk to reward ratio 1 to 2. We also go through several phases of emotions here. The first phase is here, where we see that the price goes back to our limit order, the order is filled, and then the price goes in the direction we want. We are happy. Okay, here we are happy. A few minutes later we see that we can't break the last local bottom, and we have a strong bullish reversal bar to the upside. Trading has never been as easy as with AvaTrade. Create an account using the link I left in the description of this video, install your preferred trading platform, deposit only $100, and you're ready to trade Forex, commodities, stocks, indices, and cryptocurrencies. There is something that is not clear, visit the AvaTrade Academy and look at the dozens of training videos. So the price makes a sharp reversal against us. We try to calm down and believe in the trade. Absolutely no emotions. A little later we see that our position is already at the minus. Now comes the hesitation whether the price will hit our stop loss. We start to worry, to be nervous, to sweat. Here we are not happy at all. Then we see the price making this impulse to the downside, and we are calm again because we are now confident that the price is going down. A few bars later, without noticing, we are already out of the market. We are angry, we are sad, we are not happy at all. So 5 phases. The first phase is we are happy. Second, no emotions. Third, we are sad. Fourth, we are again happy. And 5, we are angry because the price has hit our stop loss. Once we have a hit stop loss, we have to analyze where we went wrong to avoid hitting our stop loss in the future. What is the mistake here? We are trading against the trend. Here the price is going up, so a swing high, a swing low, a swing high, then another swing low and another swing high. The price is going up and we are trying to push it down. Well, it can't be done. We are not a hedge fund. Okay, so we move on. We already know that the price is moving up, so we will look for a long positions. Just let me clear this all. So what do we have here? We have a swing high, a swing low, and a swing higher high. We expect a correction and then enter into a trend. We are waiting the price to come back to this zone retest it, and then continues its upward momentum, but it doesn't come back. This means that we shouldn't have entered this position until the price is where we expect it. Some time passes and we are not in a position, but the market continues to grow and makes another break. So swing high, swing low, and swing high. Then once again we are waiting the price to pull back to this area right here, this consolidation here, last consolidation, retest this zone and continues its upward momentum. Again, if you don't want to sit in front of the chart, you can set an alarm. I usually do so. Now it is very important to see what the price is doing. In addition, I draw a trend line. Okay, from this high to this high, the price is retesting our zone, breaks above the trend line with 1 and 2 bar, two big huge green candles. We always wait for at least 2 bars to close above it to know that it is a valid breakthrough. We have a red bar. The retest of the breakthrough has started. Here it is good to place our stop buy order above this red bar, because when the price gathers strong momentum, sometimes it doesn't test the breakthrough with accuracy, and we don't want to miss the move. If we break above this red bar, we continue to the up, putting our stop loss below the swing low. A risk to reward ratio of minimum 1 to 2. And let's see the next bar. So the next bar is again a green bar. It first goes below this red bar, you see, below this red bar, and then above this red bar. At this 5-minute candle, the bears first break below the last bar, but get trapped after the bulls take control of the market and close above this red bar. This is a good sign. Now let's see how the trades plays out. Okay, play. Gather momentum. Okay. In this case, we follow the continuation of the bull trend with these big bars. Stop again below the swing low, as you know, and the risk to reward ratio of minimum 1 to 2. So here we have a 40 pips profit. Sounds good. A little later, we see this huge move to the downside. Let's move to 1 hour. So on 1 hour time frame, we're in a bearish trend. Whoa, high, lower wall, higher wall, lower wall, higher low, lower low, and then a higher low. This here is a double top. This could be a triple top too. After we see this shooting star right here, this shooting star, this is a shooting star, we should enter into short position 1 tick below it, and of course stop loss above the recent swing high, which is exactly right here, and target of minimum 1 to 2 risk to reward ratio. If we want a bigger risk to reward ratio, we can put our targets from left, the first, the second, and our third target. So the first target will be 1 to 6 risk to reward ratio. The second target would be 1 to 7.78 risk to reward ratio, and the last third take profit would be 1 to 9.5 risk to reward ratio. Let's see how the trade plays out. Okay, if you opt to trade a little bit risky, you can take 1 to 9.5 risk to reward ratio trade. This means that if you risk only at 2% of your capital, you're already 80% in profit. So if you have a 10,000 account, real account, in this trade you would have $11,800, or in other words, $1,800 profit for only one trade, risking 2% of your capital. Well guys, this was for today. I hope you enjoyed the video and get one step closer to your successful Forex career. If you want to know about secret RSI formula, just click this video right here and to watch it. Don't forget to subscribe, or Elite Trading Zone will hit your stop loss. Till the next time.